Thanks, Tracy. As Tracy said, I'm a partner in Istari Ventures. We clearly are focused on payments and payment infrastructure, and one of our kind of sub-focuses on emerging markets, specifically America. Let me just start off with letting our panelists introduce themselves. Christian and Eduardo.
Hello everyone, thank you for having me. My name is Christian Narvaez. I'm the founder of Istari Capital. It's an early stage Web3 accelerator, and also a venture partner at Ripio Ventures, which is a Web3 VC fund investing across infra, DeFi, and gaming.
And my name is Eduardo. I'm one of the partners from Quipu, a company that we have in Colombia, and we're very excited to be here. Thanks so much.
Perfect, thank you. And myself, I was a 20-year trader on Wall Street. Towards the end of my career, I ran emerging markets for Barclays and HSBC. And the tail end of that career was very focused on Latin America. So I was the head of LATAM for HSBC before moving on to Coinbase and Export. And I think I really appreciated the situation when it comes to currency, payments, access to banking, working in Latin America. In 2019, I was running our bank in Argentina when capital controls were put on, they're still on today. And as you know, the situation going on in Argentina, inflation is over 100%, currencies depreciated multiple X. And the situation is quite dire for people who don't have access to external currencies and access to crypto. I wanted to read a couple of statistics, and it kind of enforces why we're so interested in this space, what the opportunity set is. So 70% of Latin America is unbanked. 65% of Mexicans are unbanked. So our southern border partner, 65% of the people in the country are not banked. 55% of Mexicans work in the unofficial sector, meaning they don't get a W-2. So you're starting to see this story about access to banking, access to financial freedom. And you're talking about 700 million people. And when you take the numbers are actually slightly better, but at the same grave scale in Africa, we have 67% of Africans unbanked with over 1 billion people. So I think I wanted to set the stage of what the opportunity set is, and where crypto can start to help and provide opportunities for banking the unbanked and financial inclusion, and here two people are really helping to drive that forward. So first question we're going to start off with is, what about the Latin American market that makes you most excited from an investment standpoint? We'll start with you, Christian, on the investment side.
I think you started off with a great statistic, which is banking the unbanked, right? So what I'm mostly excited about it is the future of finance and building sort of those rails sort of on chain. And obviously we're going to elaborate more on that as the questions progress, but beyond that also real world assets, right? How can we tokenize real estate or farmlands? And I think there's a couple of companies already doing that, and we can talk more about that. Right?
Actually, that's an interesting point about tokenization, because there's a lot of, other than ZK everything and tokenization kind of move away from AI and kind of, but tokenization is a phenomenal innovation that brings more capital. It's like just tokenizing something and trading between the same people or using it doesn't grow capital. So maybe you talk a little bit about kind of lack of investment opportunity in Latin America and tokenization, like real estate on making product.
I think in general, I think access to credit is extremely high, right? Whether it's personal loans, whether it's mortgages, I mean, just in general, having sort of an avenue to provide that access brings all those costs down by leveraging blockchain technology. So at a high level, I think it just makes everything more accessible and price friendly.
So yeah, for us, what moved us is we're changing people's lives. It's the truth. There are people who have opportunities there. They don't have access to banks. They don't have access to these kind of loans that people need to do their businesses. So that's basically it. Our founders had the chance to live 1 year in those areas, trying to understand how these people work, how they transact, how they live. And that's how we designed our products. Living there and thinking how we could help these people to go to this.
Perfect. So obviously this is a noble cause and there's opportunity to generate revenue and profits from bringing this solution to the region. What are some of the kind of major challenges that have resulted in this people leaving the bank and not having access to credit and other financial?
In general, just the lack of infrastructure or the lack of just private investment in the region. I think because just not to be specific, or to be specific, for example, Argentina and Venezuela, a lot of political instability sort of scares away private capital. And beyond that, across LATAM, across other countries, so that political instability, I think, has a lot to do with that. And now, with this technology, people are able to build amazing products, amazing companies on chain.
And I used to work for a big institution there, for a big financial institution for around 10 years. And what happens there, in my view, is that these institutions are not interested in these kind of finance. That's the main thing. Why? Because it's just too expensive. That's it. But the thing is, these institutions are not thinking on how we can solve this and how we can get into these people. And that's where fintechs are, trying to fix this. That's I think the main thing. Of course, regulation has a lot of things, but today what's happening, it's actually a good thing because those governments are actually thinking how we can help these people and these things to action so they give solutions.
So I think Eduardo brings up a good point. Across the region, banking the unbanked is a bipartisan, has bipartisan support. Even through different types of regime changes, whether they become more populist or not. There's a great unlock to a country's growth. They can get more people to participate both in the official sector, to pay taxes, and have access to financial security. So if we all agree that governments around Latin America support banking the unbanked, why do you think it's not happening? What do you think some of the challenges are to banking?
Well, from my point of view, as I already told you, what happens is that traditional banks are not able to know how to check this. That's it. Fine fintechs are trying to do it, but the truth is, as you told before, there's still not enough incubation and not enough investment in that area. That's basically from my point of view. For me, actually, regulation is good because what's happening now is, as is in China, these governments, they want to know the information from the people. So they're actually encouraging people to go to this other alternatives just to let them to have, to know where their money is going. That's basically it.
And I guess just to a quick one, there's a high cost to AML and KYC that I think, to your point, it's just not profitable to bank people outside of that ecosystem. And I think, so fintechs are doing a really good job of bringing down sort of leveraging tech to bring down that cost, but beyond that, I think with blockchain, it makes it even more efficient to penetrate the unbanked or the unofficial economy.
Yeah, so when I was at HSBC Mexico, so Mexico is the largest, HSBC is the largest financial employer in Mexico, and when the current president AMLO got elected, he convened a banking task force to figure out how we can get more people banked. And one of the results of that task force was, when you talk about the KYC AML cost, the average deposit they thought they could bring in banking in the next 20% was $500 in a checking savings account. But the KYC cost on that in Mexico is over $1,000. So there's no way they can make $1,000 on $500 in fees to even account for that. And you're talking about tens of millions of people if they were pushing this initiative, which would have to be subsidized from somewhere. Now, one might think, well, why push down so much KYC, AML type of structure? Illicit trade, illicit financing, and illicit money moving through the system is a huge concern. In many countries in Latin America, it's also an agitator to, if that money gets back into the US, it creates So something that seems pretty obvious, that, why not just release, relax the rules, is actually a big challenge for governments.
From a cost perspective, just to put it into context, right? For example, the average day of a blue collar worker in Ecuador is $6 a day, right? So if you send $100 from New York to Ecuador, you're probably gonna pay anywhere from 10 to 15 bucks. Right? So if we could break that cost down, in a very simple example like this one, those $10, $15 goes a long way. It's 2 days worth of wages in a third world country. So what may seem common sense to you, or what might be a drink, at SLS, to you, it goes a long way. So just wanted to put that into context.
So I think we talked about the banking and bank, or the next two biggest issues, we take them one at a time, is if you start with the banking issues, there's also credit and remittance, right? So if you think about, maybe we'll start on the credit side, and this is not going to be a shameful promotion of Quipu, but they're in the forefront trying to deal with getting credit to people that are not on the books officially for the government.
Yeah, the first thing is that, as we already told, like, people there, they don't have opportunity, so what's happening for us is actually very exciting because we're growing so fast without any marketing, just 48% month to month, just crazy. The truth is that what we think we're going to be different for is that we're not only going to one growth, just because these people deserve to have this money and, and transform their processes with it. What we want to like, for our, standpoint of view, what we want to start doing is to be working with different institutions there, like for example banks, and for example the government, to see how we can help them to give, these type of alternatives to people. That's actually what we're thinking. And in this moment, actually, we have a big project with the government. And we do have a big project with a bank, the biggest bank there, which was the one I used to work with, actually. And the truth is that they're very interested just because this is a big business. It is a big business. Just to let you know, people there are having loans for around 45%, which is 45% a year. That's their rates. And we can lower that. For people, it's really hard to pay that. We can lower that by bringing, better opportunities for them and to bring, other sources of debt that we believe they're going to be fine.
Yeah, there's a couple of fintech solutions that are sort of recreating how to determine the credit profile of a borrower, right? And Monet is a good example where they're working with corporates to give cash advances on your salary, where they leverage sort of the bills that common, utility bills, your cell phone, to create sort of a credit profile and give you a score. So there's different fintechs that are getting creative with everyday sort of basic utilities to create a credit profile to be able to provide loans and whatnot.
So just like the bank and the unbanked, why don't the governments mandate, most Latin American countries have government either quasi-owned or like implicitly or explicitly owned banks that they have significant control over. Why don't they just have the banks make loans?
Well, in Colombia, that was actually going to happen. The government said to the Banco Agrario, you have to disperse these loans, we're going to give you these funds. But the truth is that they said, we don't know this, we have never worked with them. So we need a company that helped us with it, and that's where, Quipu came in, and that's what we're doing now. We're helping these banks to see, and we're actually the mechanism that is getting to know all of these people and disperse all of this money. So I think it's a great opportunity for fintechs to work with the governments and tell them, you don't know how to do everything, let us help. We want to be involved. That's basically it.
I'll keep it simple, partnerships with fintechs and just technically help.
So it's basically connecting that last mile, right? The banks have the money, but they have no way to interact. this brings us kind of to our last big challenge, which is the remittance side. And I will say from my time at Coinbase, myself and my team were big internal sponsors of the Coinbase remittance program, which I won't get these guys more into it, but the tax that's levied on some of the poorest people, both on both sides of the border, to move money, to keep supporting families, is really tragic, and away from the charity of it, like creating a sustainable system in which money can cross borders in a safe way is a big challenge. But just some of your thoughts on the remittance situation now and how it can be better.
More companies need to address sort of these on-ramp, off-ramps, not just across US and Mexico, but also region as a whole in South America. I think there's many companies in LATAM that maybe they're creating these solutions, but they're solely focused on the country or the country next to them, and it's not sort of across the region. So yeah, I mean, beyond Coinbase, I mean, Pizzo has a good sort of remittances program where I think they sort of took like 6% of all remittances from US to Mexico last year, and that's good for sort of that flow of capital, but we need more of that across the region as well.
I think that's a big business. When I worked in the financial institution before, we thought it was a huge business because they were taking part of the business that we had. The truth is, as you can see now, Colombia and other places in Latin America, they're very afraid because a lot of people is just leaving the place, and well, this is just indicating that remittance is going to go big. That's the only thing. It's really going to grow really fast for the following years, especially because these governments they're leading us to this type of a crisis that makes people to go and look for other opportunities. So for me it's going to be a glowing opportunity there, not only in Colombia but in Chile, Peru, and Mexico.
And just to give some context, so the World Bank states that there's the average cost of remittances globally is 7%, it's higher in Latin America. When you think about that in the context of tens of billions of dollars, like just to do a transaction, the Western Union will grow maybe 7%, which is higher than most like developed world loans that you may have and holding that risk for you. So just to give it the context of what the opportunity is. We're on to our last question. So we've talked about all the different opportunities and how we're going to approach those, and finish off kind of on a less positive note. We'll talk about one of the challenges. These all sound like great ideas. They all have big market, total addressable markets and opportunity sets, but what's holding us back?
I think in general in LATAM, you don't know what you don't know. And these founders are sort of just tech in general, venture capital, different ways of seeking financings they haven't been exposed to that. And I think in the past, I would say 5-7 years, the beauty about all of that is that we've seen a couple of unicorns pop up across LATAM, Rappi, Mercado Libre, Pushki, Ecuador, which is having that same PayPal effect had here in the US, where once you have that exit or that sort of senior management or talent is going off on their own and creating other sort of companies that are tech enabled. And that's sort of, it's a great opportunity to continue growing the tech ecosystem in LATAM, and eventually, obviously, they're going to look into new innovation, which is the blockchain, and build on that as well. So it's a challenge, but for me, it's a promising sort of region to be at, and I'm along with that, for sure. That's why I'm doubling down heavy in the region.
Yeah. For me, there are several things. The first one is we have to check the risk. That's the truth. Because as I already told you, people if their income is not very high. So when you charge them with 45% of interest, it's just difficult for them to pay. That's one thing that we have to understand. So how we tackle risk, there are several things. We're building a big AI process to see how we can, disperse these loans to them. But the other thing is how we can make these loans cheaper. That's one of the basic things. Because most people, they don't pay their credits, just not because they don't want to pay it, just because they can't. And just to tell you one thing is that all of these people, the market that it's attending there is the are bad guys that are giving them money, then asking them for 200%. They ask that, and then they don't pay, they take their houses, they kidnap their kids, and they do bad things to them. So it's really a big opportunity, and without that, just to tell you that, that's a $1 billion business. The one that they're there, that's actually going to Mexico now, it's going to Peru, it's huge. So it's a big opportunity.
Well, I think we'll finish on that. I think, just thanks everyone for joining the session. Hopefully, we've explained why we're so focused on Latin America from this payments angle, not only the opportunity for innovation and eventually profit, but it also feels like what we're bringing to the space will allow a lot of people to get a lot from it. Thank you, appreciate it.